As reported earlier, low-cost airline One Time is bankrupt and has had to file for liquidation. That's after a final meeting with stakeholders. The airline's final flight was at 3 p.m. today, and no further flights will be permitted. Now, One Time owes various institutions, including Acsa, around 350 million rand. Joining me on the line, Chris Zwegenthal, CEO of the Airlines Association of Southern Africa, for more on this breaking news story. Thank you so much for joining us today, Chris. So, of course, it seems that the business rescue protection process didn't work, and One Time, in fact, has filed for liquidation. Can you just confirm the story right now as it stands?
Well, that's my understanding. I must be honest, I've received that news also from listening to various media people, and I've heard Lucky Kamani on another station confirming that. So, yes, that's true.
So,
unfortunately,
what is the process from here for people who have one-time flights? Because we're hearing right now that the last flight was at 3 p.m. today. I know people, in fact, that were wanting to fly on one-time flights and they weren't able to get on today. So overall, if you have a one-time ticket, what does that mean?
Unfortunately, I don't believe it means that you're ever going to be able to use that ticket, obviously. If there's arrangements, so they're talking about, again, making arrangements with other airlines, that's obviously between One Time to arrange with another airline. But I think probably the best solution for somebody who has to get going and get to another destination, they're going to unfortunately have to purchase another ticket, another airline ticket.
Chris, I mean, how does this work from a systems perspective and from an airport's perspective if an airline goes bust? I mean, they've got personnel within airports across the country. They've got, infrastructure and planes. How does the system work from here on out?
Well, I mean, obviously they've now gone into liquidation, so the formal process of liquidation starts. Obviously, they need to ground everything and obviously minimize any costs. They'll obviously go through the normal process. Unfortunately, it does impact everybody that's involved with the airline, including the employees, and obviously the assets obviously are parked and they can't do anything with them. So it's a very unfortunate situation. In terms of passengers, there is obviously potentially a process that they also have a claim against One Time, but again, it's going to have to go through quite a long process. I'm not sure what the level of the guarantee is that the licensing council potentially holds from One Time, and that's also another way in which passengers may be able to claim and get some relief, although I don't believe it will be the full relief, but there is something on that basis as well.
Chris, I mean, Velvet Sky went bust, so too did Nationwide, and then now One Time. Is the airline industry in distress in South Africa? Was it something that these specific airlines did wrong?
So look, I think we are in a very tough operating environment.
It seems we have a problem with that line, but of course we did get a tough operating environment. We know that. It's a lot of factors really that are hitting, that has hit airlines, and one being the competition, price competition in the sector, and of course that oil price. We've still got Wayne McCurry with us in studio. So Wayne, you were sitting with me last week,
yes,
Lucky Kamani, and you were saying that morale was okay at the company, that things, he seemed quite positive.
He seemed quite positive that the business rescue would work, but clearly not. I mean, as we spoke about with him, the low-cost airline industry is a tough business, and maybe even worse in South Africa, because clearly SAA, the government sponsors Mango. They're not operating as, let's call it, a normal commercial viable company. There's clearly subsidization there. But he said, no, the new Minister of Transport, the new executive at SAA understands this. So he seemed very upbeat, and just over a week later, it's gone. But it shows you, I mean, I've never liked the low-cost airlines. What's your competitive advantage? And that was a question I asked him. And there cannot be any other competitive advantage other than price. And of course, if the price is too low, you don't make any money, then you go bankrupt. I mean, there's been so many.
And he talked about break even to bank even, but break even oil price being $100. And we know it has been above that for some time now.
You just can't compete. And I suppose that's capitalism. Some people don't make it through the system, but low-cost airlines seems to have more than their fair share of bankruptcies. I mean, there's been Flightstar going back many years now. That was one of the first low-cost ones that came into the country. That also gone. Velvet Sky flew for about a week, it seems, and they also went in. But now there's a new one going to open up now. I just don't understand it.
It just boggles the mind that anyone would want to go into that industry. But from a shareholder perspective, you've of course been around for some time, seen some companies liquidated. How does the process work?
You basically you frame your share certificate and you put it on the wall as a memo. it's highly unlikely you're going to get anything out of that. It's just highly, highly unlikely.
As a lesson learned.
Yeah, I mean, look, actually, surprisingly enough, there are very few bankruptcies in our stock market. In fact, very, very few. The last one I can remember is Samba. You know, every other, let's say, when other companies got into trouble, they were always bought out by someone, and there was some form of return. But, you know, one time, unfortunately, you're not going to get anything.
I mean, you know, we always talk about this when you talk about value investing, and of course that, you know, tough decision. Do you buy a company that's trading below its net asset value? If it gets liquidated, there could be some, you know, opportunity to make money, but too much risk.
Value, in my definition of a value investor, is you buy a company that's seriously down on its luck, but with one other criteria: it's not going to go bankrupt, because a lot of the deep value traps, in fact, end up in serious trouble. You know, so you've got to try and differentiate. Have they got a competitive advantage? Have they been successful in the past? Is this just a cyclical story, or is it a structural? Obviously, well, with One Time, it was a structural issue. And I mean, it's tough, eh? There's lots of people who work for One Time, lots of people who own airline tickets. Those tickets are worthless. You know, you're not going to get anything back for them.